Finding profitable trades in manic markets. Again, my name is Don Kaufman. You are watching a TheoTrade presentation. Here at TheoTrade, we are not financial advisors nor a broker-dealer. I spent a long time in the brokerage community. I'll explain that here momentarily. Next on the docket, this is a copyright disclaimer. This is ours. This is not yours. Okay? I also throw this up here, and please, everybody should know right now, you can write down this email address, support@theotrade.com. Again, support@theotrade.com. Why? If you need to get a hold of me after tonight, you can do that, okay? It's okay, support@theotrade.com. We use a general inbox. The reason I always say this is, you have trading questions. We can answer trading questions. It's okay to do so. And I like everybody to know that you can contact any of us here at TheoTrade. We're a few mouse clicks and a couple of sentences away. So by all means. Next on the docket, this is why you're here. Listen, by the end of the webcast this evening, and I find it imperative that anything that I tune into, I got to have some really definitive takeaways. And I'm going to try to provide those for you. First of all, find what strategies become the bread and butter trades of TheoTrade and volatile markets for investors and traders alike. We're going to show you very much a bread and butter trade of what we do here at TheoTrade. Number two, see where, some of the largest market opportunities exist right here, right now. What strategies you can actually use to harness some of these trade ideas. Oh, number three, why markets will remain volatile for years to come. Listen, I cannot stress the third point enough, right? If you're not aware, I'm going to make you aware in a moment here, we have completely opened up Pandora's box. People, this marketplace is angry. Number four, discover how to build trades with limited risk, through maximizing returns. Number five, find out how you can short markets, individual stocks inside of retirement accounts. That's important. You can short inside of a retirement account. I'm just going to show you the most effective way to be able to do that. How you can generate weekly returns while offsetting your portfolio's risk. See numerous real trade examples. Trades that are working in today's marketplace. I am also going to reference a number of times my live trading account. I hope that's all right with everybody. Listen, we don't talk trading. We trade. Next, our gift to you, for those of you that will stay tuned in through the entire webcast this evening, we're actually going to give you the SPX expected move indicator. We do this, to keep you tuned in. It's $197 value. By the way, this indicator, it is 3 years of my expected moves. I'll explain what that is here momentarily. All hand-drawn, hand-calculated. And it's an indicator that has literally changed the way that you're going to view markets. It's it's a very quantitative indicator, all right? And I'll just make a quick point with this. When I say it's the change the ways that you view the marketplace, because you're going to want this indicator. Right in this neighborhood right here, I just highlighted an area, In the highlighted area, that was effectively 23 weeks of extreme efficiency in the marketplace, the most efficient marketplace we ever saw. Every single week stayed inside of the expected move. By the way, this is something that if you ever tune in to any of the videos that we do here at TheoTrade, think about it. How many of you have ever tuned into a video other than tonight? I mean, some of you tonight's the first time you've ever tuned into TheoTrade, but if you've ever tuned into a TheoTrade video and you've listened, to me on any weekend videos and some of the nightly videos, you have heard me talk about this expected move. When things became very interesting, we started breaking apart in terms of expected moves, all the way here. And actually what? Mid-January, all right? Breaking apart. We were breaking through the expected move, screaming inefficiency, screaming that risk is coming in the marketplace, And it came. And we had no idea what was in store for us. None. All we knew is that the marketplace was transitioning. Anyway, we'll give you this again. We are going to give you a link, to the site right at the end of the webcast. Right at the end of the webcast. Stay tuned the entire time. Next, a little housekeeping. Listen, what we're going to talk about this evening is a skill set. Pay attention. I mean, hey, never before in the history, okay, of markets or me doing a webcast have we ever had literally a captive audience. Oh, I've been waiting for that for years. Hopefully some of you are not a captive audience like me. I have 3 children, 5, 7, and 10. And there's no school right now. There's no school. We're a week in without them being in school. It's almost 10 days now. Okay. Shut the door, turn off Skype, chat, whatever else is distracting you. Just close down Facebook, put the phones on silent mode, kick the kids out. Please kick them out. Grandkids, kick them out. The dog can stay. The dog is quiet. Took the time to be here. It's important. Focus on being here. I'm going to throw a lot at you in the next hour. Next, well, just a little bit about me. I watched order flow for 15 years. That's kind of why I'm here. So a little background on myself. I grew up around trading. I started trading in the late 90s. Talking about crisis in the marketplace, I actually started trading only about 2 months prior to the long-term capital debacle in 1998. And that was, I went to work in trading on the floor in Chicago. I got the job through a cousin of mine. Again, I grew up in a family of traders. So I then proceeded to go to work for a startup firm called Thinkorswim. I did that for approximately 15 years, the better part of 15 years. While I was there, I actually built the education division of Thinkorswim. I was there in 2007 when we took the company public. I then went on to run education for all of TD Ameritrade. And at the time, when I exited TD Ameritrade in 2015, they had 7 million clients. Okay, and during that entire time, I had access to the largest retail order flow in the industry. By the way, I was there when the market completely tanked in 2001, 2002. I was there when the market tanked in 2008. Okay, I was there during 2011. It just goes on and on. I mean, I've seen order flow, and people say, whoa, what's watching order flow? It means I had access to everything that you did, every single trade that you did. We studied, okay? We ran the education group. Me specifically, I headed off the entire education group. We studied trades. We know what works and what doesn't. What you're going to learn here tonight comes from watching billions and others' mistakes. And I got to tell you, okay, people, it's been absolute carnage out there. I've talked to TD Ameritrade. I've talked to every major brokerage firm pretty much on the street inside the last 3 weeks, and it is hideous. It doesn't need to be, and I'm going to stress that to you throughout the course of this evening. I've done a couple of tours. This is me on TD Ameritrade TV. I actually did a spot yesterday morning as well on TD Ameritrade TV. This is actually a CNBC spot, myself versus Mr. Wonderful himself. Let's just jump right into it. Okay, I have so much to cover tonight that I want to spend the time doing just that. One of the biggest things that I have to instill in you, okay, is that just moving forward, and I hope that everybody, like, wake up. Moving forward, you must have skills, plain and simple. If you don't have skills moving forward, it's just done. We are done, okay, with a monkey buying stocks. We are done, okay, with a bullish marketplace that's going to last decades. If everything, okay, with everything that's going on right now, if they turned around tomorrow morning and said, that's it, everybody come out of your house, false alarm, it wouldn't make a difference. We're in it now. We're in it, okay? And I cannot stress to you enough what that means when I say we are in it, okay? We broke the market apart. There are now going to be financial issues, and those financial issues could take, okay, literally years, if not decades, to work through. Moving forward, you have to acquire a skill set. We're no longer in a market whereby monkeys throwing darts are going to be profitable. I think you guys know what I mean. It's the Roku, it's the Tesla, okay? It's the, we went through the marijuana stocks. We even went through cryptocurrency. It's all done. advisors, mutual funds, indexing capital, which is ETFs, a mix of bonds. All of those are going to underperform traders in the years to come. Okay, we are now officially, okay, in a trader's market. Listen, what happened? You woke up and everything is different. Everything. Everything that you know about trading and investing over the last 11 years has changed. And I'm going to focus on that because I can absolutely now draw conclusions between what we're seeing in terms of some of the volatility and some of the other extreme volatility. But I am going to tell you, I've seen some things occur in the last few trading sessions, change the way you think about everything. What you've witnessed in the last 3 weeks, it's going to transform financial markets from this point forward. Do not even consider, don't look for, don't consider a short-term recovery. Okay? Long-term fiscal damage, it's been inflicted. We're going to feel the impact again, as I said a moment ago, for the current crisis, years, if not decades to come. Do you realize what the Fed just did with their balance sheet? By the way, I'm not pointing fingers towards the Fed. Do you realize how much capital they just put on the balance sheets? Okay? 5 trillion here, a couple trillion there. Right now, by the way, they're going to start writing checks, sending them out to individuals. Okay? They got to give people basic income. Not that I agree or disagree with it. I'm just saying it's going to have an impact for years to come. And I'll actually show you in the marketplace precisely what I mean by that. Listen, decisions, they have to be made. What are you going to do with a 401k, an IRA, long stock positions, mutual funds? What are you going to do? What you don't want to do is flush your money down the toilet. There's an interesting irony in this picture I was thinking about. Toilet paper. Okay? Toilet paper is hundreds of dollars these days. There's a shortage. Okay? Listen, you don't have to be brilliant right now. You just got to be a little smarter than your competition. You need to learn a few skills that can profit in this type of volatility, right? So, as I was saying also earlier, do not expect the volatility to subside anytime soon. So, these are just a few bullets I wanted to put together. First of all, there's a global recession. It's forthcoming. Bar none, it's happening. Bailouts are needed. They're mandatory. Okay, and I'm not just talking about bailing out the airline stocks or bailing out cruise ships or bailing out, what are they? Now we're starting to go down the moral hazard here of bailing out what? Casinos? They're going to bail out casinos? I don't know. Okay, companies are going to go under. Okay, individuals are going to go under. A liquidity crisis right now is brewing. If you're unfamiliar with a liquidity crisis, for the most part, okay, the stability of a marketplace has a lot to do with liquidity. It's brewing. Stock buybacks, they're done. Forget it. You can't buy back stock, and it's not even Apple's going to want to buy back stock now. Okay, stock buybacks, in the last 3 weeks, they're done. Global oil prices, they've completely crashed. Speaking of which, I promised I would actually bring up a live trading application throughout the course of the evening, and I will do just that. So if you don't mind, I'm actually going to bring up oil to begin with. This is a daily chart, but when I say, markets have absolutely crashed, that's oil. Okay, if you missed today, we have $27 a barrel oil. You know the implications of this? The implications just of oil at that price, they can't pull it out of the ground. They just cannot pull it out of the ground. And I can go on for hours. Nearly every industry and service that we're just going to see epic fallout. Bankruptcy is going to be an option. The depth of the damages, okay, are just, and again, the depth of the damages, we're not sure yet without clarity at this point as the crisis is still unfolding. And it's kind of weird to do a session in the middle of a crisis. By the way, I wanted to show you something when I'm talking about this, and it can't be overstated what we're about to go through. Okay, what can't be overstated? You want to see a crisis? I know a lot of people, they look at stuff like the S&Ps, right? That's the S&P 500. Year-to-date percentage is down 22%. But you want to see a real crisis? I'm going to show you one. We're going to go to the bond market. Okay, you should be very afraid. The interest rates are flying higher in the last couple of days because they're questioning the stability of the entire system. You think about that for a second. That's the bonds. In the history of the bonds, no one has ever seen a move as drastic as we saw today. In the history of the bond markets, no one's ever seen a move even close, okay, to how drastic that move was literally today. You can go back 10 years, you can go back 20 years. I don't care how long you go back. The bonds sold off by 10 points today, okay, by 10 full points. You want to see Okay? I'll show you exactly the bonds. I'm short bonds. Okay? I'm short bonds. Literally, 10 full points. Never seen a trade like that. Okay? It just, things are going on right now that, 20 years in this business, and I can actually stand back and say, hey, the depth of this, it could take years to even work through some of the damage that's been done. Tonight, we're going to focus on some core strategy and some trade logic. I want to introduce you to a real world strategy you start using tomorrow. Okay? So what we're going to do is, again, we want to clip risk. There's no question you want to clip risk in a market like this. When I say clip risk, you got to mitigate risk. You got to chop some of your risk where and when you can. We're going to discover a strategy you can use in order to profit from stocks heading down or are range bound without taking upon yourself extreme risk. Okay? So I am talking about, hey, what happens if stock goes down? Well, in manic markets, one of the things I'm going to position tonight, in fact, I'll just cut to the chase and get to it. We're going to talk about getting short the markets. Is everybody aware of what getting short the markets are? I know there's some people that are always brand new. They've never come out here before. They're like, I don't even know what shorting is. We're going to be looking for products that go down. One of the things you're going to need for your survival to the future, you are not going to survive in this business just trying to pick stocks that are going up anymore. It's done. It's okay to say, like, I think this stock is going to go up, or I think that stock is going to go up, or, I'm going to go out there and I'm going to buy me some stock like Ford is like a $4 stock now. And I'm going to buy, it might be up to $5. Okay. It was a fast moving market today. I'm going to go out and buy some Ford. That's fine. Okay. However, we're also going to have to take the opposing side of it. The markets are going to be impossibly difficult from this point out. We're going to be wickedly volatile. If you can't get short, you're going to be basically you're going to be playing inside of the marketplace with a hand and a foot tied behind your back. You are completely disarming yourself if you're not willing to use some short positions. And the short positions I'm going to create are going to be available in an IRA. The short positions I'm going to create are also going to mitigate, which is control your risk. So allow us to briefly review the structure, the risks, and the logic of getting short. Getting short. Shorting, is in effect selling shares we do not own. Now, time out for 1 second. Somebody's going to come in here and be like, hey, they banned short selling in the Philippines. They banned short selling when it came to the 2008 crisis. Maybe they ban short selling tomorrow. Don't worry. This is going to overcome that. Shorting is in effect selling shares that we do not own. How can you sell something that you never owned? Well, shares that we short are borrowed from our broker and sold with the intent of later buying them back at a lower price. Let me explain a little bit about a short position. And I hope, again, for some of you, this is just a very rudimentary, idea. I think how many people here have never shorted? It's okay. Come on, people admitting it's the first step today. How many people? By the way, somebody was asking earlier, what is it meant by bankruptcy is an option? Well, you think that the U.S. government's just going to bail them out and let the shareholders, live? That didn't happen during the financial crisis. A lot of the shareholders got taken out. There's a lot of car companies during the financial crisis. Those stocks went to zero. Go look at a chart. Go look at a chart of General Motors. They let the companies go bankrupt. Bankruptcy is going to be an option. People think that they're going to bail out Boeing. They are going to bail out Boeing. They have to. It's a defense contractor. They will bail out Boeing. That's not to say, though, that the stock can't go to zero first. Now, think about that for a second. It's Boeing. They may let the stock go to zero, cancel the shares. Then what do? Well, the federal government comes in. They reissue new shares. The federal government takes, a few million of those shares, a percentage of the company. They reissue the shares, and a couple years later, boom, we got ourselves a viable company. That's what happened during most of the financial crisis. I like that. That was a great question. So a lot of people here have shorted, a few have not. Okay. So let's actually review a little bit about shorting. So you're going to go out there, okay? And by the way, I love using the symbol in here, okay? My fictitious symbol is always stock, and it has to have stock like that. So we're going to go out there and we're going to short stock at 135. Now, when I say shorting it, we are going to sell, okay, to open. We're going to sell to open this $135 stock. And immediately everybody goes, whoa, where do the shares come from? Well, listen, I was in the brokerage industry for 15 years. Okay. You learn a lot in the brokerage industry. And one of the cool things you learn is how it actually happens. Okay. When you sign up for, an IRA or a margin account of any kind, if you actually read through the fine print, did you know that when you're opening up the account and you're reading through the fine print, you're allowing the brokerage firm to do what's called hypothecate the shares. You know what that really means? That means they can borrow them from you. So the shares, even though they belong to you, the brokerage firm is borrowing the shares from you so that they can lend them, okay, to another monkey. And you go, what do you mean you're lending them? How do they lend my shares? They're allowing somebody, okay, to be on the other side of your position. Now, see, for me, I've always thought to myself, I'm like, I want to know who's on the other side of my trade because I want to screw him, right? You're like, oh, that guy John, he's long, I'm short. Who's going to win this one? I love that idea in my head. But the point being is, okay, you can sell a stock that you never even owned. Okay, and this kind of stuff is done in business all the time. When you go out and buy a computer, right? What do? You buy the computer, you plunk down $1,000, then what do? Then they build the computer and then ship it to you. Well, that's selling a computer short, right? Because they're selling a computer, quite frankly, they don't even own it yet. They haven't even built it yet, right? So sometimes if you order a specialized computer, they sell you the computer short. If you order carpet for your house, what do they make you do? Okay, they come, they measure, they sell you the carpet. Then they go, oh, well, now we have to go out and buy the carpeting to give you the carpeting. That's selling carpet short. In this case, we're selling shares at $135. Why? Because we hope those shares go tanking down. Maybe they go to 95. What do you make? $40 per share. Now, let's get to a few real deal examples. Does that make sense to everybody? By the way, let's look at the dark side of this for a second. What happens if you short at 135 and this stock doesn't go down? Let's say this stock pulls an Amazon and it goes from 135 all the way to $2,000. What do? That's not good. That would not be good at all, because technically people, they don't fully understand or comprehend the idea of being short. But what everybody hears about being short, they're like, there's unlimited risk. Now, let's continue. Finding a short candidate. Walmart has remained unscathed in the current environment. Literally, okay? A few consumer staple stocks appear to be impervious to recent volatility. By the way, I'm giving you something. On the contrary, though, in every recent bout of extreme volatility, I want to show you something interesting. On every recent bout of extreme volatility, consumer staple stocks have been crushed along with the rest of the S&P 500. Why should this time be any different? Okay? What? I'm talking about Walmart, and people are already getting defensive. I love this in the chat. They're getting defensive. They're like, that thing is Walmart, man. Don't you mess with my Walmart. I'm buying toilet paper. Okay? We're going to the mattresses, and we're buying toilet paper and paper towel, and that's going to hold Walmart up. Yeah, it held Walmart up right now. Okay? But, and by the way, let's look at Walmart really quick. Right? Now, I have a chart that I have on the next slide, but I like to look at stuff now, like real time. So this is this is Walmart. Walmart, in fact, I can even pull this up for years. Let's do it. Let's actually pull Walmart up for the last 3 years. That's 3 years of Walmart. That's 5 years of Walmart. Okay? This is the maximum chart on Walmart. Okay? This is the maximum chart on Walmart. And one of the things I want you to see, okay, is if I start to zoom in, right? If I start to zoom in, how did Walmart do in 2008? How did it do in 2008? Tank like everything else. Okay, there's Walmart at $60. This is October of 2008. Just showing you. There's Walmart at $60. There's Walmart at $48. Okay, Walmart got hammered. Anyway, there's a bunch of bouts of volatility in here. That was not going to be a good year for Walmart there. Okay, in every major bout of volatility, consumer staple stocks get hit as well. This is an initial knee-jerk reaction. You know, it's like everybody loves it. Okay. Everybody loves right now also Netflix. They love it. Okay. I just want to make a quick point. They love Netflix right up until the point they started selling it. Why? Well, because they were actually realizing that everything is going to get hit. So you look, okay, in this case, I wanted to give you a candidate. I wanted to give you a candidate. Why should this time be any different, right? I'm kind of showing you a little bit of the Walmart chart. Again, this is Walmart over the last 15 years. But I reiterate something to you. In every major bout of volatility, let me show you another one. Okay, take a look at this chart and take a look right in this this time frame. And I apologize. I'm going to re-highlight that. I did a terrible job there. Right in this time frame. This is 2018. Right here is 2018. The beginning of 2018, the market tanked. Took Walmart with it. The end of 2018, the market tanked. Took Walmart right with it. Right now, we're tanking. Walmart's not going with it. Don't worry, okay? That train is never going to be late. Now, problem, short positions, they have some issues. Got some issues with you people. Listen, short positions technically have unlimited risk to the upside. Think about it, right? You short a stock, it could run up indefinitely. If you don't believe me, look at Amazon, right? Short positions also tie up massive amounts of capital and margin. Short positions cannot be placed in retirement accounts. You can't go out and short a stock in a retirement account. And short stockholders, a lot of people don't know this, they actually have to pay dividends. So if a stock pays a big dividend and you're short, did you know that you have to actually pay the dividend? Listen, we have to overcome all these issues to make this thing work. How can we build a short position? Number one, control our risk. Number two, not pay dividends. Okay. And number three, place it in a retirement account. If you can't, okay, go through and hit those three major items, you got yourself a problem. And how are we going to do it? Getting short without shorting the stock. In our aforementioned example, we shorted shares of Walmart. Okay. All right. In substitute of the short shares, we can elect, okay, to buy a put option contract. Now, time out. I said the O word. I said option. Now, some people don't know what an option happens to be. That's okay. Okay. Bear with me here. I want you to grab big, broad strokes of logic, and then we'll narrow it down. The put option, first of all, will limit our risk to the premium paid and provide us, okay, with an outstanding downside potential. What I'm saying in this particular case, for those of you that are unaware or have never traded a put option before, right here, okay, is a proposal. It is a put option. This is a 130 put. Now, stop, okay? Where is Walmart currently trading? Now, we're going to actually go back and forth here in a second, all right? Go back and forth a little bit. We'll pull up Walmart, okay? We'll look at the Walmart trading about $119. You know, the irony is I picked this example specifically for today because the stock was up and up huge move in Walmart. I mean, Walmart moved up almost 12% today. And you're like, are you crazy? No, I'm going to do this the right way. I'm going to go out and I'm going to buy a 130 put. Now, the 130 put gives me the right, not the obligation, the right to sell stock at 130. Time out. Do I own any stock? Do I own any stock? No. I'm going out and buying a 130 put. Why? Because the 130 put can profit if the stock goes down. Well, how does that work? Well, first of all, if I, okay, buy, let's actually take you through this whole logic over here. If I buy the 130 put, that gives me the right to do what? Sell stock at what level? 130. So if I buy a 130 put, and right now the stock is trading at about 120, where do I want the stock to go? I want that stock to go down. Let's say that stock goes all the way down to 100. So if the stock goes down to 100, I'm just giving you a couple examples here. If the stock goes to 100, what do I have? I have a 130 put. Let me ask you something. What does the 130 put give me the right to do? It gives me the right to sell the stock at 130. Do I have any stock? No. Do I want any stock? No. What's a 130 put worth when the stock's trading at 100? It's got to be worth at least $30. At least $30. You go, but how am I going to get my $30? Well, I'll tell you what, if they don't give you your $30, you can actually exercise your right to sell the stock at 130. And if you sell your stock at 130, then you could buy it back in the open market right now for 100. You'd make the $30 that way. Okay? Any way you want to slice this, it's $30 in your pocket. So how come more people don't do this? Well, they don't understand, all right, that you don't have to go out and short stock. This is a much brighter way to do things. Okay? Shorting stock carries a heck of a lot of risk in this marketplace. Now, this particular short position, let me just be forthright. This one isn't that cheap. This is going to cost me $15.35 per share. Okay? But it provides stellar downside capabilities. The key, though, in here, the key, why this put? Why April? Why 130? Why for $15? Why not use a different put? Like, listen, that's the key to this thing. All right? Let me actually show you. Risk is limited to the debit paid for the put and provides us nearly dollar for dollar move if Walmart sells off. So I actually took this screenshot during the day. Walmart there was trading about 117. Okay. We hypothesized that we bought the 130 put. Again, if you buy the 130 put, it gives you the right to sell the stock at 130. What if Walmart, okay, in the next, let's call it a month. What if Walmart in the next month, we're going to go down, okay, to 90? Ooh, wee, that's big. You have the right to sell the stock at 130. Everybody else in the world can only sell the stock for what, 90? So what do? The 130 put. What's a 130 put trading at when the stock's trading at 90? It's going to be trading for a minimum of $40. A minimum of $40. It's probably going to be going for a lot more than that. That's the kind of thing that I want to emphasize to you, okay, from the get-go. And right now in this marketplace, I'm telling you, okay, you're thinking like, hey, there could be some opportunities to buy some stock. Whoa, whoa, whoa. I don't disagree with you, but slow down there, cowboy or cowgirl. You're going to go out there and you're going to buy something in this marketplace, okay? If you haven't noticed lately, let me just show you something interesting right here, right now, okay? Today was some rally to the upside. You want to know something? Today is also, okay, in the after hours, are you aware that the futures are right now down over 3%? Are you aware that we're only a few points away from lock limit down? Do you guys know what lock limit down is? You should know because it's been happening day in and day out. We're only we're 12 points away from limit down right now. 12 points away from limit down tonight. It's a nice quiet night. You want to see what limit down looks like? Okay, there's a limit down. There's actually a limit up. Okay, this is just looking at a chart. I just want to show you limit down. Okay, how many days in a row do you have to see this to understand? We're not coming back. There are stocks that you could buy in this screen, okay? But I'm going to overemphasize again. You're going to have to look for stuff that's both long and short, and we're going to focus on this. I'm going to show you exactly why we're going to focus on this. I hope you guys understand the use of the put because I'm going to take it a step further, okay? Why we use a put in place of short shares. Why do you use a put? Buying the put option, it's nearly the equivalent of being short the stock, but it ties up minimal margin. Okay, ties up minimal margin. Buying a put can be done in a retirement account. I like it. Limits risk and upside exposure. Remember, a second ago we paid $15 for this thing. What do I care? Let the world fall apart. If I'll lose $15, I'll lose $15. So I'm going to tell you something in Walmart. Okay, I don't think Walmart is going to be my savior. I think Walmart's actually going to be one of the greatest victories because it will sell off eventually. I mean, it's at an all-time high. Eventually, the marketplace gets to a point where it says, that's it. But I'm not here to convince you. I'm not here to convince you that you should short Walmart. I want you to understand the strategy. It limits the risk. It can be done in a retirement account, ties up minimal margin, okay? And put buyers don't pay dividends, okay? The put can also be held, okay, for an indefinite period of time with the use of what's termed a roll. You know what? Let me show you something. Do you see this trade down below? For those of you that have never seen these types of trades, right here, that is a real trade. It was done on March 16th. That's yesterday. It was my account. It was in Lululemon, okay? And I rolled from an April put to a June put. This is one of the biggest credits I've ever received in 20 years of doing this. A $56 credit. Now, if you've not looked at Lululemon lately, okay, that's a stock that I've carried a position in for a considerable period of time. Here's Lululemon over the last couple of days. You're like, that looks like everything else. No, look on a percentage basis. This is down 40%. Okay, it's down 40%. That's a year to date. It was actually up 13%. So the drop on a percentage basis has been much more significant, okay, than the S&P 500. That's what we're here to do, right? We're here to learn to outperform, if you will. Outperform to the upside or outperform to the downside, okay? But that's why you use a put in place of short shares. Now, allow us to ice the cake and sell options premium against our short position. Now, let me show you, okay? Sell premium against your shorts. I bought the June Lulu 230 puts, okay? I bought the June Lulu 230 puts. And I'm going to take you through it, all the verbiage, and then I'm going to show you the physical trade, okay? Can I sell a short-dated March 20th expiration? When's March 20th? Let me ask you, when's March 20th, right? That's this Friday. I can sell an option against the option that I own. I own the 230 puts, okay? You want to see? There they are. I actually rolled to the June 230 puts. Because I rolled to the June 230 puts, it allows me to sell a shorter dated option against the option that I own, okay? In doing so, I can collect $6.50 in 2 days' time. It's insane right now. It's insane. Let me actually show you, okay? Listen, I already own the June 250 puts. In fact, here, want to see something even more interesting? Let's go right to my account. All right, listen, I have a couple of different accounts over here. It's actually in this particular account. There's my puts. I own these puts. I own the puts, which means, okay, I'm short the stock. I'm equivalency of being short the stock. If I own the puts, okay, I want the stock to go down. But because I own this put, it's the same thing as being short the stock. So then what I'm going to do is I'm going to come in here and I'm going to sell a shorter dated option, okay, against it. I'm going to sell a shorter dated option against it. You're like, that's crazy. And I'm collecting all kinds of premium, okay, to do so. Are we getting good? I'm selling just a 2-day option. I could sell a 2-week option, okay, but I just use June. Think about how many. I just want to bring up the platform again here. Okay, let me just show you something interesting. Could I sell a short dated option against it? Yeah, here, this one will collect $3 or $4. Could I do it the following week? Of course. Collect another $3 or $4. Could I do it the following week? Yeah, sure. Collect another $3 or $4. People, I have 94 days in here. You know how many weeks are packed in there? That's a full quarter. It's a full quarter. What? You got 12, 13 weeks, maybe even 14 weeks packed in there. Okay? I could just keep selling premium and selling premium and selling premium. If you want to collect some income against these positions, this is how you do it. This is how you do it, and I can't stress that enough. It only gets better. I'm just selling a short-dated put. Now, I know, time out. Some of you guys are brand new. You're brand new, and you're like, how do you sell an option you never owned? Okay? Because I own the June puts. That equivalency is like short stock. What I'm really doing, let me just make it super easy. I'm reversing a covered call. Okay? What a covered call is you buy stock and you sell calls against it. Almost everybody in here knows what a covered call happens to be, right? Where you turn around, okay, and you buy stock and then you sell a call against the stock you own. So if you buy a stock at $100, you sell a call, you sell, for example, the 110 call. You have upside potential, right? If the stock goes up, you make money all the way to 110. But that 110 call, okay, is trading for something. Imagine if the 110 call were trading for like $6. It's crazy because there's so much volatility right now. These things are trading for like $5 and $6 for 2 days. You can't make this crap up. There's my screenshot. I'm in the position right now. You just can't make it up how wild the volatility is. So people are like, well, I want to make some money on finding a stock that goes up. Oh, I have an answer for that. Forget about it. Who gives a crap about what stock goes up or down? Look how good the premiums are. It's a free-for-all right now. Premiums haven't been this good in the history of the entire business. Not even in 2008 were options this juicy. Okay? Listen, okay? It's rain and juice right now, and it's time for you to step up. And I'm going to tell you why you want to be short. Why do you want to do this with short? You don't want to do this crap with covered calls. Because skew is there. Skew. Love it or leave it. Okay? There are distinct advantages of being short. Distinct advantages of being short. The options market favors the sale of put options in what is termed skew. What is skew? It's a distortion. I'm feeling a little distorted today. What happens is this. Puts are worth more than calls. Because people, they buy puts. Why do they buy puts? I must protect myself. Okay? In effect, you collect more options premium for selling put options. You collect more premium for selling put options. It's raining premium. Okay? You don't need an umbrella. You just need a way to catch the rain. Here, bears befriend skew. Here's Walmart. Back to Walmart. And I wanted to jump around a little bit. Here's Walmart. Okay? What would you rather sell? Puts or calls? They're equidistant. Equidistant. Look, we're trading right now, right there. Do you see that? We're trading at what? 115. I want you to look at the 100 puts. Everything on this side of the screen is puts. You know what the puts are trading for? 330. And then look at the 130 calls. What are those trading for? $1.57. Okay? Yeah, there you go. Why would I rather sell puts? Because they're trading for double what the calls are trading for. By the way, I love what somebody said in chat. They go, you leave my Walmart alone. They're delivering everything. Hey, listen, you want a way to pay for those deliveries? You want to pay for that $100 toilet paper? Figure this crap out. Because the puts right now, it's a total free-for-all. Okay? And maybe you're like, I don't want to short Walmart. I don't care what you want to short. You want to go look at the spiders? Spiders are the most liquid product in the world. Okay? You know you can sell options for literally, all right? You could sell options in this thing for like a day. The put options in here are insane. Okay? They're just insane. I can't stress this enough. When you start opening up all the different strikes and so forth, oh my God, the market's down that big. Apologize. The market's down huge right now. Huge. Okay? We're about to go limit down again. Yeah, I can see the spiders are actually down $9 in after hours. Huge. Okay? The put options are so huge in comparison to the equidistant call options. The premiums right now, this is 100% implied volatility. If you guys have had any trading experience whatsoever, okay, a lot of people right now are running scared. This isn't the time to run scared. This is the time to run head on into it, okay? This is what you train for. This is it. Like, you want an opportunity? This is it, okay? This, you get once in a lifetime opportunities. Yeah, I had one back in 2001, 2002, 2008, okay? It was raining volatility in 2008. It was incredible, right? The best 5-6 months in my entire trading career until the last 3 weeks. Nothing is like the last 3 weeks we've seen. Nothing can even compare to how high the volatility is right now. You gotta learn how to get short on this stuff, okay? Selling premium against our puts. Selling short-dated options against our longer-dated puts. It brings in a weekly income stream, lowers our cost basis in the put that we purchased. Think about that. Collect $4 or $5. People are like, I had to pay $15 for a Walmart put. I don't care that you paid $15. I just don't care. Oh, I paid $15 for a Walmart put. It's Walmart. It's supposed to be the most docile animal on the street. Look at this. Who cares if you paid $15? There's options in Walmart that are trading for $4 or $5. That's for the next 10 days. Okay? That's for the next 10 days. You collect $4 or $5, $15 of premium that you paid out is nothing. It's going to lower your cost basis in there. It's actually going to curb your risk. You're going to what? bring in weekly premium can profit when a stock stays flat or even range bound. Even if the thing goes the wrong way, you're still going to make the money on the premium. Takes substantially less risk than shorting stock. It could be done in a retirement account, and selling the put places the option skew in our favor. And I'm telling you, you don't just need this in your life. You got to have it in your life right now. You have got to have this in here. How to collect income being short. The idea is it's just so easy. We want to achieve maximum reward for minimal upfront risk and be capable of selling options premium. This one just screams limit your exposure, maximize your premium selling potential. Okay, this is what it looks like on a risk graph. This is the Walmart trade on a risk graph. If you've never seen a risk graph before, I'm going to throw this up here. Okay, what's your risk? I told you it's $15. Look at all the downside potential. But I can then sell stuff against it. I mean, could you imagine in just the next couple of days, just a few days, Walmart's going to sell off $10, $12 maybe? Okay, it'd be a huge P&L. And again, I'm not here to convince you about Walmart. I just wanted to give you one straightforward example, right? Let's continue on. You want to see this in action? Because again, this is huge potential with very, very minimal risks. Here it is in action. This is a product called HYG. What is HYG? Does anybody know? Okay. It's kind of hard to even see up here, isn't it? High yield ETF. What is HYG? Okay. I'll bring it up actually in a live trading application. Okay, this trading application is known as Thinkorswim. It belongs to TD Ameritrade. This is junk. This is junk bonds, okay? So this is junk, and this is actually the chart on junk. So here we are in junk. Listen, we knew something was up. We knew something was up in the marketplace. So we went out, okay, and we purchased a in-the-money put, and we did it on February 21st. February 21st. Now, do we have any idea of coronavirus? Do we have any idea about what was going to unfold? Absolutely, unequivocally, no. Okay. The only reason that I went out and I purchased the HYG put, okay, and I'm going to tell you exactly my reasoning for this. We saw issues in China with debt, and we knew that China was having huge problems with the coronavirus. There was absolutely no inclination whatsoever. We just assumed that this would have some carryover and people would get nervous about junk debt. And it happened. Okay, so let me actually show you how HYG materialized. By the way, the HYG put initially cost us, okay, $3.63. But let me show you a little bit more about the trade. Okay, this is a live trade example on HYG. You can see that the trades were initiated, and I like to highlight this and show you exactly how this works. This is my trade history. By the way, the trade history, this is a screenshot. It's a screenshot, but that screenshot comes directly from my brokerage account. This is my live brokerage account. Okay. In a brokerage account, I don't mind showing people. By the way, I show everybody every single position I have on every single day. I don't care. Got nothing to hide over here. You know, what do I keep in the brokerage account over there? Here. Okay. Oh, let me actually total them up. Okay. What do I keep in the brokerage account? About 500,000. That's all I need in these two accounts. One of these happens to be a kind of a funky version of portfolio. The accounts themselves are up, okay, considerably though inside of the last 3 weeks of trade. But I do keep about $500,000 in my accounts. Okay. All my positions are in here. Okay. Behold, whatever you want to see, it's in here. For profit, for better, for worse. Okay, the bonds today were spectacular for me. Took a little bit of a hit on some other positions, but it is what it is. Okay, when I was talking about the account statement, that comes from here. This is my HYG. Okay, this is like 300 days of HYG positions. Okay, bear with me. I'm going to go back to the other account where the position exists, and you can look at everything I've ever done in this particular product. Everything I've done. I like to be like the full Monty, but I took a screenshot to make it a little easier to interpret. Okay. So this trade, right, most recently, and this is HYG is something I've traded in and out of considerable number of times in recent years. I like this product. Okay. This was the most recent trade, and there's the exact time and date that it was put on. I bought it to open. Okay. It was a May 91 put. Okay. This is a credit received, a credit received, a credit received, a credit received, a credit received. I exited. Period. The trade lasted Okay, only a period of what? 3 weeks. Okay, 3 weeks. I exited some of it on March 12th. The rest of it went yesterday. For every $365 invested, I got back $1,495. Okay, so I only invested $365, okay, per contract, and I had a bunch of contracts. And to make that clear, I had a bunch of contracts on. I got back $1,495. It's a 309% return. Now, time out. That does not include the premium I collected. Okay, the 300% return doesn't include this. That's actually, okay, premiums. Those are premiums that I was selling in here. Okay, and I'm out. I don't mind saying it. I'm out. Okay, what am I waiting for? Like Armageddon came. I'll find another. I'll find another one. Maybe like Walmart. So, by the way, this is $365. Let's clarify something. I did not come in here with $365. Okay, you can add a zero to this. This could have been $3,650 to be able to make $14,950. Still a 309% return. But again, that doesn't include all the premium and juice I sold against it. It was huge. Okay. Next one. You guys want to see another one? Next one. This is CSX. CSX. Very similar situation. Okay. By the way, the irony of CSX, I initiated the short position in CSX the exact same day, okay, as I did the HYG position, because I figured junk, trains, okay, China was having issues. I took a shot. We went for it. And here is CSX. This was such limited risk. By the way, CSX, this is not an inexpensive stock. I mean, come on, people, it's an $80 product, okay? Here is CSX. And if you're unfamiliar with CSX, it's a train company. Like, this isn't like the latest, greatest tech company. It's a train company. It's boring. Here's all my orders and fills, the exact date and time. I initiated the trade by buying a 90 put for $10. Now, that was $1,090 I invested. Okay, and for every $1,090 I invested, I got back, okay, $1,899. What I did in this example, I want you to see, okay? This is the opening position. These are the closing transactions. I averaged out of this. I averaged out of it. I had one at 14, another one at 19, another one at 22. That averaged to an $1,899. Okay, that's what I got back out of it. It's a 74% return. Time out for a second. That doesn't include the premium I collected. Here's the greatest part of this trade. Premium. I squeezed so much juice out of this thing that the sale of the premium, okay, in many cases is actually better than the return over here. It was huge, but I just totally excluded. It's not a 74% return. This thing was a grand slam home run. Okay, listen, collecting premium, being short, gives you the power to trade massive stocks and index products or ETFs with substantially less risk. Now, you want to see the mother of all trades? It's one I've actually been talking about on evening videos. Okay, I've been talking about this one since 2018. In fact, okay, there were so many trades that I did in this next one. By the way, this next one is a stock called Boeing. Anybody familiar with it? It's a stock called Boeing. I have been short Boeing, and I have been short Boeing using these puts, okay, since right here. That is January 8th, 2018. January 8th, 2018. The initial put that I purchased, it cost me $35.95. Okay, that was a $3,595 investment. Take a look. Forget about all the credits. Forget about all this for a second. Forget it. This is the initial open. Here is the finality of the close. Okay, the finality of the close. I just sold an option for $147.80. By the way, I closed that thing last week. Had I held it this week, it would have been $250, but I didn't know. Okay, nobody does. It's the biggest, okay, put option in this example that I could ever give you. It's what? $3,595, and I got back $13,992. Okay, basically a 200. No, let's just call it a 300% return. I mean, absolutely cracked it out of the park. But over the years, think about how much premium I've sold against this. Not every trade went my direction. I want you guys to know that. Boeing, I have sustained the position in Boeing now, okay? People, for years, I've sustained it. Not every trade has been a credit. There's been some debits in here. But the fact that I was able to go out, and by the way, when I say I've had this thing on since 2018, I can literally go back in here, okay, and jump back to 2018. And I don't mind doing this, okay? I'll actually, during this presentation, I'll jump back right in my account to 2018. I will show you the position from inception. There it is right there. That's the original position. Okay. I'll even spread out the amount of time so you can see, okay, all the different transactions that I've had in here. And again, you're like, oh, well, and listen, excuse. This thing has been just magnificent. This is almost a full year. This is in 2018. Okay. All the different transactions. Look at this. The sale of premium against it, $13 here. I collected $13 here. It just goes on and on and on and on. All right, a string of examples in here. I just showed you one of the best ones we've had. Now, okay, what our members are saying. Listen, this is a little hard to read, but I'm going to quickly gloss over it. Don, you were without a doubt, okay, the most comforting thing having anything and everything to do with otherwise crazy business called trading. Whatever you do, don't die, don't go away, don't quit, okay, or us. And I say us as in anyone with half a brain smart enough, okay, to not let a day go by without first checking, okay, in on your morning broadcast. That first hour completely negates what otherwise turn out to be yet another amateur hour, okay, and all the unusual antics that go along with it, okay. For those of us who can't afford you, okay, we really can't afford not to afford you. Understand, okay, I don't copy your trades nor even take the trades in the morning, but I do try to soak up as much of your wisdom as humanly possible. Okay, I'm just going to jump down over here. Your company, you guys run truly priceless. Sorry for being so long-winded. Just thought you should know that a lot of people, smart and otherwise, depend on a whole hell of a lot of, sense, admit it or not. As far as I can tell, you're the real deal. Words just don't do, okay, or work you justice. And it goes on and on, okay. Oh, I like this part. And thank your wife. Okay, thank your wife. By the way, this one came in on March 5th. Thank your wife on our behalves too. Yeah, you wanted to thank my wife because she has to put up with me on a day-to-day basis, especially when we're working 15-hour weeks like we have been in the last 3 weeks. I mean, it's been serious out there. Okay. Next example. This is actually on a company called Citigroup, and I wanted to show you this one as well. In terms of Citigroup, here. That was my initiation of the trade. This was actually on December 19th, 2019. I bought a put for $12. Okay, here's some of the credits I received, and this is the exit. By the way, this exit was, again, it was yesterday. Most of the exit was yesterday. This is for every $1,210 I invested, I got back $4,045. Remember, again, you don't have to do this, okay, $1,210 worth. There's a lot of people in here, they're like, I want to put some real capital at risk. Okay, you could have done this $12,000, okay, what? $12,100 to be able to make $40,000, okay, $450. It's just that easy by adding zeros to it, right? More contract size, but I want you guys to see real trades, okay? Next example on here, and again, this doesn't include the premium I collected against it. Next example, this is the XLP. This one, I mean, just wild amount of things to look at in this trade. Here's one where I actually purchased the initial puts. Okay, I gave you guys all the way back 2019, purchased initial puts. Okay, credit, debit. Anyway, I exited most of it for about a $12 exit on here. Huge. And I can go again and again of different trade examples. I had the XLU on. Okay, again, this was XLP. XLU, by the way, is utilities. XLP, this is consumer staples. The opportunities, okay, they just keep coming in here, okay? And I know people look at this, they go, that looks like it has a lot of time. Look back for a second. Look back. These are trades that I did, okay, in the XLP, dated all the way back to September of 2019. The reason I showed you this and this last is because this is extraordinarily hands-off. Like, this is not something you're going to sit there all day. There's a couple of rolls, couple of verticals, okay? Couple of trades here and there. This isn't the end of the world. It's no time, no problem, okay? Everything we displayed today was actually done live here at TheoTrade. All the trade results, okay, perfect for part-timers. The strategies that I used tonight, this is set and forget. This is put some stuff on, walk away, a fraction of your time. This is not hardcore trading, okay? This is sit back, relax, okay, and let it happen. Although some of you right now, you're like, nah, I want to trade. You're stuck at home. I get it. Listen, here's some of the characteristics. The characteristics of collecting income being short. I think the attributes of this strategy are undeniable, okay? You never have to buy the stock, okay, or sell the stock, right? You're not short, really, okay, but you're synthetically short, right? Define your risk. Risk is limited to precisely your comfort level. Do you ever need money contracts? You never need a stop order. There's no stop order. It's also, this is actually the perfect thing to do to reduce the risk of a stock portfolio. People don't realize that. You're like, well, I own a bunch of Apple and I own a bunch of Microsoft. Maybe you should get short a little bit. Why wouldn't you? You're like, what do you mean? If you think about it, if you're short Walmart against long other positions, it actually offsets some of your risk. It's also an excellent tool if you're seeking returns to build a smaller account. I mean, building short positions, don't let this option stuff intimidate you. The trade below is being done for a $15 debit. But the trade below, it's a big power saw. I mean, options, okay, are the power saw of this marketplace. Used correctly, really extremely effective in creating returns. Used incorrectly, you're going to lop off a couple of fingers. Okay, you got to realize that, right? Now, you can handle getting short and collecting income. You may not know options, maybe have limited experience in placing option trades. Again, do not let options intimidate you. You're going to need these strategies for the foreseeable future. We can show you how, and we can show you when to place these strategies in a matter of a few hours. What we do here at TheoTrade is we create detailed recipes for every trading strategy, including getting short and collecting income. Okay? It's the same thing as like baking a cake. You got a recipe to do that. Why don't you have a recipe to trade with? And that's kind of what we do here. We say, this is the right thing to do. I mean, listen, this is what you need to know to successfully collect income being short. And I stress this, like, what do you need to know? If you wanted to put this strategy on, you guys tell me, what do you need to know to be able to put this strategy on? Because that's going to be the ultimate question over here. Everybody and anybody in here can read a book about options. The book on options, it can tell you the strategy I just gave you. What can't it tell you? Okay? What makes a viable short candidate? What makes a viable short candidate? Why Walmart? Why did I do Walmart? Okay? I'll give you, you know what? I'm going to give you something here. I'm going to give you something real quick. Okay? You want to know how dangerous it is to pick the wrong candidate? Why use Walmart? Okay? Why not use some smaller stock? Okay? Let's give you what's a smaller stock right now. Okay? Something like maybe like GE. Okay? Could maybe trading $7. What else you got? Like, why not use something else? Okay? Here. Could use something like AMD. Why not use AMD? We could use AMD. It's only a $41 stock. It's going to be a little cheaper to do it. Okay? Nope, won't fit the criteria. Okay? Why won't it fit the criteria? Because what volatility should you seek out? What volatility does this thing need to be? As soon as I looked at AMD, I balked. Okay? I balked. I saw something in AMD that just scared me to death. There's no way. It's not going to work. What volatility should you seek out? What options expiration do I select? Should I be a month, 2 months, 3 months? A moment ago, you were looking at my trades. And in my trades, you saw stuff out to June. Right? I was closing stuff for June. Why am I all the way out in June? What am I doing in June? It's March. Okay? So what options expiration do you select? What should be the delta of the option I buy? Delta, delta, delta! You got to figure out what delta of the option you should buy. What options do I sell against my position? There's a delta coefficient for that too. You got to know what option to buy. You got to know what option to sell. You got to know what volatility should be. You got to know what even makes a good short candidate. How do I roll my options? I'm a rolling fool. Okay? What does a roll mean? Most people are like, I don't know what a roll is. That's moving options. Okay? For instance, from March to April. April, okay? April, March to April, April to May, or March to June. It's a party out there, people. How do you even build the trade? What's the amount of, like the right amount of risk for me? I don't know what the right amount of risk for you, but I can tell you how to do it, how to calculate it. Let me show you exactly what we do here at TheoTrade. We create recipes in trading. What does a recipe do? It's about answering the what ifs. I mean, the whole thing about trading, okay? Do you realize what can happen once you're in a position? The market could go up, the market could go down, it can go left, it can go right, the volatility could pick up. I mean, listen, what ifs means what might be a good stock ETF candidate for a short position? What's the correct options expiration? How much capital do I commit? What strike price, price options do I buy? What do I sell? It just goes on and on. This is what we do here. This is what we do here. It's not about strategies, okay? Again, a monkey reading a book, you got strategy. You got to have criteria. You got to have definitive criteria. You got to build checklists for each strategy, each unique variable. What if the stock goes up? What if the stock goes down? What if a dividend is coming? What if I get an assignment early? How about if we had a checklist for every single variable you could possibly encounter? It's actually flowcharts in here. And when I say a checklist, this is a pre-flight checklist. If you hopped into the cockpit, okay, of an aircraft, just like any other pilot, what do? Okay, do they sit down in a car and turn the keys and just hit the gas and go? Of course not. They sit down in the aircraft. They go through a checklist. It's ridiculous. The pilots have been flying for 30 years. They still go through the exact same checklist every single time. Then the pilot actually gets up, walks out of the aircraft, goes down the stairs, pulls on the engines and stuff. You're like, wow, this guy's really he's really checking out the aircraft over here. You have to do that. You have to do that in this business, because if you don't know where your variables lie, if you don't have that checklist, you don't stand a chance. You have to know the how, the when, the why, at what price. It's just the beginning, though, of the variables you're going to face while collecting income being short. Okay? As I've been saying, you can read what a few of these option strategies are. You might, even know how to build a spread, or you might know how to build, a covered call, but you don't have the recipe for success, okay? And you need the recipe for success. We have 20 plus years of trading experience. That's just me. I had access to client order flow for 15 years. I viewed and studied millions of trading accounts, traded myself. I ran education, okay, for, at the time, what was the largest options order flow in the entire, retail world. 15 years I spent watching order flow, and running education for the largest order flow in the entire industry. Why do I mention that? Because that's how we build criteria. That's how we build these checklists. Criteria is your recipe for success. The following, the strategy, the corresponding criteria requires the utmost attention to detail. This particular strategy, we spent years fine-tuning this stuff. When you approach the section on criteria, you follow the steps. Again, you follow the steps to build a trade. We put together a course for this. How to collect income being short. It's $497. It's a 3-hour course. It's available immediately. Okay. This is one, we archived it already. We archived it because we wanted to make it accessible immediately. We didn't want this thing to be like, hey, there's a class coming in a week. There's a class coming in 2 weeks. Okay. This one, it's ready. It's ready right now. The class slide deck that includes the entry and exit criteria, it's available immediately for download. The course is archived right now, and you can download the course onto our mobile application for iOS or Android. If you don't have those, you could watch the course on your iPad. You could watch the course on your computer. You could watch it on your iPhone. You could watch it, on your Android, your Google phone. Again, it's $497. The course, I'm going to actually take you through for just a second, some of the curriculum. And again, we've got a little bit of a bonus tonight. That's why I put a slash through this. We had a little bit of a bonus tonight that I'm going to show you here momentarily, but I actually wanted to jump in to the course curriculum. How to collect income being short. This is the entire workshop curriculum, First of all, we're going to talk about how to short the market with very little capital so you can collect income, even from a small account. How to use options, to short so your risk is minuscule compared to shorting stock. Discover how you can create short positions in any retirement account. All right. How to easily identify the most promising short candidates. That's important. Provide you a little bit of edge on that. Proven strategies used by seasoned traders to sustain short positions while waiting for volatility to strike. A rarely looked at tool called option skew. We're going to detail a little bit about skew and why it's, much more eloquent at a time like this to be selling puts. Okay. We're also going to discover the step-by-step criteria. By the way, I literally had to put together two different pages because the curriculum is that deep for this 3-hour course. Discover the step-by-step criteria for selling the right options so you can eliminate the guesswork and get results. What the advantages and disadvantages are of selling short-dated or weekly options. Okay, that's selling options to be able to collect income. Discover the benefits versus risk of using inverse ETFs. People always ask me about inverse ETFs, okay, or synthetic short positions in an IRA, okay. How to determine the position size so you know how much risk to take in any market condition, okay. At last, learn how to roll your positions without sitting in front of the computer so you can actually roll the position out and make this available for an indefinite period of time. Again, what our members are saying, this is actually one that came in literally yesterday. I took this screenshot right out of my email yesterday. It's from Brian. Said, wow, okay. I want to again say thank you for what you have taught me in the last 2.5 years. Okay. I bought into what you taught about risk twist spreads and duration positions. By the way, what we're talking about today, that's kind of what we call them around the water cooler. We call these duration positions, and started to trade options almost a year ago. Okay. I missed out on the last market move up. Okay. But at the moment, my IRA is up 14.8% for the year. Okay. What I have invested in TheoTrade has been so worth the money. Thank you, Brian. I wanted to throw that out there. It's 14.8% a year. I don't want you guys getting delusions of grandeur, but this is an individual that just sent me an email yesterday that's up capital. You realize the average individual right now is down, okay, over 30% year to date. Down over 30%. Now, as I was saying, you want a bonus. Now, TheoTrade, okay, we go beyond one class or one indicator. Like, I've been around in this business long enough, and I've been educating long enough to realize exactly what people want. You want everything. You want everything to trade. You want everything to invest. You want it at one place. You want it at one price. We get that, okay? We totally get that. I mean, people get the run of the mill. You buy a class, right? You buy a class, then they force you to buy an indicator. But then you have to buy another class to understand the indicator. And then with that indicator, you know what you have to do? You have to buy another class. And when you're done buying that class, okay, don't you worry. There's another class a week later. We don't do any of that garbage here at TheoTrade. We've had it. We've had it. Okay. We will give you everything you need to trade and invest at one place at one price. Your first bonus number 1, access to over 88 trading classes. We have 88 courses ready to go. And there's new monthly courses coming out. Every single month we come out with a new course, okay? Listen very clearly here because I want to show you. Everything on this list right here is available immediately, but this is only like a little glimpse of it. We have 88 classes, but available immediately on demand. You can start watching this tonight. How to collect income being short. This is a $497 class. That's what I'm talking about tonight. The next one, Guide to Surviving and Thriving in Extreme Volatility. You know what? That class is also relatively new. I only did it 2 weeks ago. Okay, this is a brand new class. It's part of it. Meaning that for tonight, okay, tonight, you're buying the How to Collect Income Being Short course, and then you're getting the entire library of every course we've ever done. And I want to make that clear. You're buying the How to Collect Income Being Short, but then we're giving you access to Guide to Surviving and Thriving in Extreme Volatility. Okay, Guide to Small Account Growth with In-Out Spreads. That has been by far and away the most, okay, watched class ever here at TheoTrade. Okay, we have Growing a Small Account with Black Book Spreads. How to Collect Income Being Short. Oh, apologize, I got that one in there twice. The Next Big Short. Guide to Selling High Probability Spreads. Iron Condor. Selling Premium Minimizing Risk. Day Trading NASDAQ Futures. Covered Calls. Okay, Income Generation for Your Stocks. Essential Skills and Consistency for Trading. Top 10 Skills for Growing a Small Account. Pairs Trading. I just skimmed the surface. It's accessed over $9,000 in classes alone. Why do we do that? Because we're sick of everybody going out there and going like, you got to buy this class and this indicator. And then when you have the indicator, you got to take a class in the indicator so you can understand the indicator and then take another class. We've had it. By the way, 88 classes. I didn't do all 88 classes. TheoTrade, we are not a one-trick pony, okay? Here are the instructors at TheoTrade. Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve, Slim Miller, Tony Rago. Jeff Bierman actually worked with me at TD Ameritrade. If you've ever been on the Thinkorswim charts, you owe a thanks to this gentleman because he created over half the studies in the Thinkorswim charts. He's also, okay, we call Jeff the professor because he's a professor of finance at Loyola and DePaul in Chicago. So he's an adjunct professor at Loyola. He actually moonlights with us now at TheoTrade. I've got a relationship with Jeff now going back some 12 years. He is the former chief market technician, though, for TD Ameritrade. Next, Matt Williamson. He's our market neutral. He's our premium selling option strategist. If you're an options super geek, maybe an engineer, you're going to love Matt. Next on the list, Corey Rosenblum. He's our senior strategist and resident swing trader. Okay, you're looking for some shorter term, okay, a little bit more intricate. You want to spend some time in front of the computer? Corey Rosenblum. Next, Brandon Chapman. Brandon's our CMT. He's also macroeconomics. By the way, Brandon also worked with us at TD Ameritrade. Brandon wrote the book, okay, for TD Ameritrade's educational division. Brandon actually worked in the education group alongside me. And Brandon, when I say wrote the book for TD Ameritrade's education, he literally wrote the book. TD Ameritrade used to have a course. The course, okay, was 18 months long. Do you know what the course cost? It was $24,000. They charged $24,000. I bet anything, okay? I bet anything some of you guys actually took that course for 24 grand, okay? I'm serious. People paid $24,000. The stuff we have here at TheoTrade, kidding? These classes absolutely smoke it. We know everything that was ever taught, okay, at all the education companies out there. What we do here is totally different level, okay? We're so far beyond that, okay? Next on the list, Slim Miller. Slim started trading when the Chicago Board Options Exchange opened. He's our veteran stock options and futures trader. Okay, Slim has been around a long time. He just retired. Okay, Okay, he still works with us, but he retired out of Chicago. Okay, and still trades now from the comfort. Okay, in Florida. Last but definitely not least, Tony Rago. He's our intraday strategist. Trades Nasdaq futures. This is if you're hyperactive, you want to sit in front of the screen all day, this is your guy. Listen, I cannot stress enough. The opportunity to get short and collect income, it's now. It's right now. I mean, here, when I say right now, and again, I'm not even done with the bonuses here. When I say right now, look at what's going on in the after hours here. Okay? Look at what's going on. We're about to go limit down again. Okay? If you haven't noticed the Russell, look at the Russell. You see these dots? Let me show you guys something. You see those dots? That means it can't go any lower. Lock limit down. That's 5% move. They locked them up. All right. I just wanted to show you that because you're talking about like getting short and you don't pick on my Walmart. We are going to pick on your Walmart. We're going to find a lot of opportunities. Right now, the opportunity, okay, it's huge. Here's the second bonus. The second bonus, and I think that, you know, giving you access to the entire library of courses is of critical importance. But the second bonus, this, okay, is to cut your learning curve. What we do here at TheoTrade, we provide you 3 months of unlimited access. Okay, to what? 3 months of unlimited access to everything we do. Our live trading chat room, we broadcast for 6 hours a day. Our traders, the 6 hours a day. By the way, you know what? Most of the time I come in here and I go, I know some people work and you can't watch 6 hours a day. Let me tell you something. Nobody here works anymore. You just sit at home. You might be working, but you're working from home right now. This, by the way, the last couple of weeks too, we've had so many people on here. There's over 4,000 people, okay, interacting real time with us right now. 4,000, okay, are in our chat room interacting with us in real time. Why? Because people are working from home. They're working from home. It's not half bad, is it? All right. All of our trades and traders are providing real-time ideas. We provide real trades. We have text and push notification trades. including what we call duration puts. Again, we use this term duration puts. We will text you and use push notification to tell you about trades. We have 5 distinct trading portfolios. We have daily coaching sessions with timely topics, meaning that we don't just stop and say, like, there's no more education. Okay, every day, we don't just trade for 6 hours a day. We have coaching sessions. We talk about a little education. We talk about what's going on in the market. Today, we were talking about being locked up with your children for long periods of time and how probably the divorce rate is going to go up after this. Okay, instructors also will directly answer your trading questions via email. It's $997 of support, trades, and insight. By the way, I want to throw something out over here. We actually coach you through everything. You can email us as much as you want. I'm going to say that again. I was mentioning like Matt Williamson a moment ago. Matt's one of our instructors. Matt, the engineers, they love him. Send Matt all of the emails you possibly can. If you're an option super geek, okay? Trust me, Matt knows more. They're going to answer your emails, okay? I stress that. I'm sure Matt is cringing right now. By the way, Matt's on there for support. You got questions? Okay, that's your guy. Again, we give you all of that on top of it. So we're giving you all the classes, right? Then we're giving you access for 3 months to everything we do in our chat room, right? All the portfolios, everything. Then we give you access to all of our proprietary indicators. Why do we give you access to the indicators? Because you need them. We have gravity points. You guys want to see what gravity points looks like? Okay, gravity points. If you've never seen this before, I talk about it on the nightly and weekend videos. These are gravity points. They're specific areas that we adhere to. You think they're effective? Look at the gravity points. These lines have been on the screen, okay, for years. Gravity points, all right? They're points, like when I say gravity, they're literally points onto which the marketplace is pulled into. How accurate are they right now? This is an intraday chart. Look at this. We're adhering directly to those gravity points. Okay, next generation squeeze indicator, Quantix, IV rank percentile, TheoQuant. I'm actually going to give you in a moment here, and I know that you guys have waited patiently, the SPX expected move. It's access to over $1,800 in indicators and scans. I mean, what are we doing here at TheoTrade? We include everything. Everything you're going to need to invest, everything you're going to need to trade. We give you classes, we give you coaching sessions, we give you email access to the instructors, especially Matt, because we want to torture him. Live trading room and live trades, indicators and scans. We give you mobile access as well, 24/7. All of this, I mean, you can access the archives 24/7. It's everything you need to succeed. TheoTrade, it's the Netflix for traders. And we call it the Netflix for traders. Why? Well, for the most part, you name a genre of trade, whether you want to be pairs trading, whether you want to do iron condors, whether you want to sell covered calls, okay, whether you want to trade futures, you name a genre of trade, okay, and we cover it. That's why there are 7 full-time instructors here. All of the following is $297 for 3 months. Now, before I go any further, okay, I'm going to say this again. It's $297 tonight for 3 months. This is not a membership. It is no longer a membership. We used to do that. Why did we used to do that? I don't know. $297. $297. We don't do that anymore. After 3 months, if you want to be, okay, part of TheoTrade, you got to pay us another $297. It doesn't go up. This is not an introductory price. I can't stand any of that stuff. It's $297. We now have, okay, over 4,000 people, right, that are on TheoTrade. That's it. This is going to include how to collect income being short. That's included. Access to over 88 trading classes. There's new monthly classes. There's a live trading chat room. We broadcast 6 hours a day. We have real-time trade ideas, real-time market insights, indicators, 59 proprietary indicators and scans. Email out the trade ideas. We have daily coaching sessions with timely topics, stocks, options, and futures, and all of the instructors directly answer your trading questions, including myself. It's been 5-6 hours a day minimum of answering emails. Go right now to TheoTrade.com/collect. Again, it's TheoTrade.com/collect. We're going to make this a lot easier for you as well. Tonight, we'll make it a riskless trade. Everything you need to start trading from novice to expert. We'll just give you a money-back guarantee. Trade with us. Trade with us over the next 3 months. Okay? Again, it's not a membership. If you're not completely satisfied over the next 3 months, don't worry about it. Email support@theotrade.com. Provide us the details of your trades. Receive a full refund. I'm not going to get crazy with stipulations. By the way, we don't even define, I want to make something clear. We do not define what satisfied is. Okay, satisfied is, do you have a smile on your face? That's me. All right. If you're not satisfied, don't worry. We'll give you $297 back. People, okay, we have 4,000 members. We'll give you your $297 back. I don't care. Okay, it's not worth our time to argue over $297. Now, there's money back guarantee stipulations. And here's the only stipulation, because we want to make this fair. We want to make it fair for people that trade. We don't want the people that come here for $297 and they go, I'm going to just get my money back regardless. Here's the only stipulations. In the next 3 months, you got to do 10 trades. You got to do 10 trades. We will do more than that in the chat room. By the way, the trades don't just have to be how to collect income being short. 10 trades from our criteria. The initial account value, you got to have at least $2,000 in the account, okay? You must follow our criteria, TheoTrade criteria. You must follow TheoTrade criteria, not your own criteria, not that you just made something up. Oh, and you have to provide real account statements. We want people that trade here. This ain't paper trading, people. You do that, okay, we'll give you your money back. And again, that's to keep, how do I say this eloquently? That's to keep the pikers out. I mean, just, you got to realize today, it's internet, you never know. People, $297, give me the money back, okay? Listen, we're traders. We want other traders. If you're serious about learning this stuff, this is the place to do it, bar none, okay? You will never find an instructor crew, anything like what we have here at TheoTrade, bar none. The 7 people we have here have more experience, okay, than ever. Like, one of us have more experience than every other firm combined, okay? Most of us actually came from the professional trading world, okay? A couple of us worked not only in the professional trading world, but in the brokerage world. I can tell you everything about the brokerage world. I can tell you every detail of every trade and how it routes through technology. I'm telling you, right now, get into TheoTrade. We'll work with you directly. 30 spots tonight on the TheoTrade Riskless deal. Again, 30 spots on the Riskless deal. The reason we do 30 spots on the Riskless deal, and again, the Riskless deal, we'll just give you your money back. Reason we do 30 spots, we have to go back and reconcile those trades. We also provide unlimited email mentoring. Send us your trades. The $297 offer on this class has never been available before. Okay, we've never done that with this particular class before. Again, we give you the first 30 spots. What our members are saying. Thanks, Don. Just finished my first ever quarterly trading report and it grows 21% return on investment. Thanks for all the help. Looking forward to your intraday course tomorrow morning. Fantastic service. I became self-directed with my trading through the education I got here. I just want you to let you know, Don, how much I appreciate him and what he does for us. For the first time ever, my account's in the green. Thanks, TheoTrade. I'm up $4,000 this week. Just to clarify, this is everything that's in the bonuses and everything you get today. I'm going to answer questions here momentarily, and I'm going to show you the indicator. It's $297 tonight, okay? It's a riskless trade. That is not a membership. Again, that is not a membership. If you don't like it, we just give you the money back, but you got to do 10 trades, right? We give you how to collect income being short. Then we'll give you 3 months access to everything we do here at TheoTrade. Everything we do. That's live trading for 6 hours a day. Okay, everything's archived 24/7. Okay, text and push notifications, trading indicators and scans, coaching sessions. We'll also give you 3 months unlimited access to TheoStream. That actually has 88 classes and new monthly classes. We have day trading and swing trading and technical trading and beginners options trading. By the way, I'm going to show you TheoTrade in a second. If you have absolutely no experience, we have an entire Start Here menu. Go now to theotrade.com/collect. Okay, that is C as in Charlie, O, L, L, E as in Echo, C as in Charlie, T as in Tom. Okay, theotrade.com/collect. Follow me right now, okay, to this link. Follow me to that link right now for the SPX indicator, because I'm actually going to bring you into this particular link. All right. Okay, this is how to collect income being short. Now, as I said a moment ago, and I'll take you back to the link over here. Let me pop it up here. It's theotrade.com/collect. Like what? How to collect income being short. We're here to answer some questions. If you guys have any follow-up questions for us tonight, I just want to show you right now. Okay, to enroll for the course, go to theotrade.com/collect. If you have questions, you can email us. There's no need to. Just click right down here. All right. Stacy can actually help you out. We have Stacy, we have Jeff, we have JP. Okay, all of them are helping support right now. Matt's in there. Matt's the guy getting tortured by the engineers. Corey Rosenblum is in here tonight. Even Tony Rago is actually joining us. So our instructors, they're on tonight. You know, they're watching this presentation, be able to answer some questions over here. So as you go in here, click Add to Cart. Click Add to Cart. It'll actually populate, okay, just that. Ooh, there's a lot of people clicking on here right now. That took a moment. It'll explain in detail all your information. It's your billing information, okay? Read through it. Payment information. All right, the other reason I wanted to throw this up here, okay, is specifically if you scroll down to the bottom of this screen, okay, it actually has the link to the SPX expected move indicator for Thinkorswim. Again, the SPX expected move indicator, the link is at the bottom, okay, of the enrollment page. The enrollment page details everything that is included tonight and the course curriculum. So again, as I said, it's got 88 classes. It's got 3 months of all access, okay, TheoTrade VIP membership. I mean, you get access to everything we do. You get all of our mobile applications. I'll reiterate once again, it's not a membership. Now, before I go any further, I actually want to take you into and show you TheoTrade. Then I'm going to answer some questions, and I promise, I've run over tonight. I promise I'll get all the questions answered here and get us wrapped up in the next couple of minutes. But welcome to TheoTrade. This is our site. What you're looking at up here, okay, right here is where we broadcast live, all right? As we broadcast, and down below is the chat room, okay? These are individuals, by the way, they're talking right now. I'm on Pacific time. That was posted right here, okay? There's Matt Williamson, one of our instructors, who's apparently in chat tonight. Say hi, Matt, okay? I'll say hi to him, okay? Any given day right now, there's at least 4,000 people in here on any given day. So everybody's in here tonight. Listen, we've been rocking. Somebody was saying close to limit down. Unbelievable. Okay. So everybody gets to pick their name, their icon, all of it. That's just the chat room. Now, after that, I suggest that you go to Start Here. Start Here. Options 101, Options 201. You got to understand that TheoTrade is built the absolute novice, okay, to the extreme of trading. I don't care you think you're experienced, you haven't seen what we have here. Okay. Some of the stuff we do here is pretty incredible, but it all starts here. This is where we want you to start. It's the absolute basics, if you will, of options. And I'll reiterate something, okay? In that's where you want to go, okay, to learn some of those basics. The next thing, so we go from Start Here, okay? Now, this is actually our member home. The reason I go to member home, this has a search engine for any topic you could possibly dream of. Name a topic. Somebody goes, I want to know about VWAP. I want to know about, okay, volatility, okay? Just type in the word volatility. Every single chat that we've ever done involving volatility, markets infected with extreme volatility, okay? Now, I want to know a little bit more detail. I want to know volatility coaching sessions. Okay. When I say a coaching session, that's something that's very detailed about volatility. Okay. And we can go on, and apparently I've got nothing found in here. I found. Okay. We could type in, out, spreads. Right. There'll be 100 different things for in, out, spreads. Kind of one of our bread and butter over there. I did something horribly wrong in here. Anyway, you name a topic. Okay. You name a topic in here and in a genre of trading, and it's effectively going to be in here. Done a horrible job apparently of searching for ideas in there tonight. The class archive. Okay, in our class archive, these are all the different genres that we offer here. Okay, option strategies, option newbies, technical analysis, day trading classes, stock classes. By the way, when you hit day trading classes, what does that look like? Click on it. Okay, I apologize. I have to log back in over here. So okay, I'm just going to log in. That's been the problem here tonight. I am not apparently not logged into the site. Okay, so as I log back in over here, all right, we're logged in. That helps. Okay, we're going to come down to the archives, and we're going to go to class archives. As I go to class archives, again, you wanted to see day trading classes. When I go to day trading classes, this is all the classes, okay, that just involve day trading. Building an intraday trading framework, beginner's guide to trading futures. Okay, but maybe, that's not for you. Maybe you're an options person. So you come over to option strategies, sell premium, minimize risk, iron condors, okay? The risk twist spread, which is the next big short, okay? How to collect income being short. That's the class we're here for tonight. In-out spreads, okay? Selling options for a living, okay? Guide to maximum edge trading earnings. Guide to surviving and thriving in extreme volatility. All of the classes, okay, are listed here. You will have access to every single one of these. By the way, as I was showing you a moment ago under this member home, yes, you can search for pretty much anything and everything. Okay, now it'll work obviously because I'm effectively logged in. There you go, coaching session. Okay, small account growth with in-out spreads. It's Q&A session. Small account growth with in-out spreads class. Okay, in-out spreads Q&A. We do a lot with in-out spreads. You name a topic and a genre of trading, it's here. And I can't stress that to you enough. Everything you're going to need to trade is here. Now I'm going to answer a couple of questions. I'm going to reiterate again the site. It's TheoTrade.com/collect. That's as in collect premium. Okay. All right. Let's continue on over here. I'm going to answer a few questions, as I said a moment ago. I'll tell you what. I'm going to start with some generalized questions. So give me just a second here, as I'm going to go to some generalized questions. Again, there's the site on the bottom, TheoTrade.com/collect. Here's generalized questions, then we're going to get very specific. First thing, okay, people always ask us, what do you need to get started here? You need a laptop, internet connection. By the way, you can use an iPad. That's fine, or an Android. All right, we have everything you're going to need to get started from absolute novice to some of the most extreme traders. Okay. The second thing, and I've mentioned this a couple of different times tonight, everybody asks us, is this a membership? No, this is not a membership. We're not going to auto renew you. We'll not bill you again. We don't like when people do that to us. We don't want to do it to you. Okay. We don't have a problem with people coming back here after 3 months. Okay. People can't believe that it's $297. They can't believe it's $297. Okay. Why do we do that? For the most part, it's got 4,000 people on the site. Well, that wasn't always true, but now we do. Okay, we have the team to support it. We don't need to auto renew you or bill you again. If you want to do it after 3 months, do it after 3 months. Number 3, TheoTrade archives everything. We understand nobody can watch everything live, so we archive stuff. We also provide you access to our mobile application. By the way, when you have a mobile application, you can watch stuff at 2 and 3 times the speed. So if I'm not fast enough tonight, you can watch this at 2 or 3 times the speed. Number 5, you can email us anytime. You'll receive a response within 24 hours. You can ask us trade-related questions. People are, can I talk about trading in the email? Excuse me, what do you think this is? Okay? What do you think this is? Of course we're going to talk about trades in there. People go, oh, I can't answer your trades. Of course we can. Don't be offended, though. You're going to email me. You're going to say, is this a good trade? We're allowed to say yes or no. That's okay. I'm not going to hide behind anything. You want to ask me if it's a good trade? No, it's the worst trade I've ever seen. Okay, well, what are you even thinking? And sometimes I'll say this is an excellent trade. I'll do it myself. Okay, that's, it's part of the business. Bounce ideas off of us. Number 6. You'll gain access to every course TheoTrade has done in the previous 4 years. You'll get classes, you'll get coaching sessions, you get live trading. All archives are searchable. Name a trading topic, and we have an archive on it. Number 7, all the trades that we talked about can be done inside of an IRA or retirement account. And with as little as $2,000 within the account. By the way, the account that I've been showing you throughout the course of tonight, I've actually got a couple of accounts. This one's actually my IRA. That's my IRA. Okay. This one, okay, this is just a regular taxable account. This is actually a portfolio margin account. It's fun for the whole family. But, okay, it's great. So you can do this in an IRA. At TheoTrade, we can also help you get approved for options trading at several major brokers. Now, I don't know what brokerage firm you're with. Okay. We here at TheoTrade talk to all the brokerage firms. E-Trade, okay, we have a relationship there. Why? One of the people I worked with at Thinkorswim, they now run E-Trade. Okay, we have a relationship there. I've also got a relationship at Morgan Stanley, which just bought E-Trade. I have a relationship at Charles Schwab that just bought TD Ameritrade. We have a relationship pretty much everywhere. okay, in this industry. You name a brokerage firm, and we can help you with that brokerage firm. Okay, remember, there are 30 riskless trade spots available tonight. Okay, every one of you can enroll tonight. And there's like, what do we have on tonight? A lot of people, over 1,000 people on tonight. Every one of you can enroll tonight, but there are 30. The first 30 people are the riskless trade spots. When we say riskless, that's if you're not satisfied, we give you your $297 back. As I said, it's $297. It's pretty much, it's not even a no-brainer, okay? You lost $297 looking at the market right now. Literally, you're looking at the market right now. You just lost $297. Don't believe me? Look at the market right now. There goes your $297. Okay. By the way, Brian, I can help you with Canadian accounts as well. We can help you with some of the Canadian accounts. Can't guarantee everything. It depends on the brokerage firm, but Canadian accounts could be a little tricky over there. I'm telling you, get results, take action. You want to enroll for TheoTrade now. There's just no risk whatsoever to you. It's TheoTrade.com/collect. Now I'm actually going to answer some of the specific questions that came up in the chat room, because a bunch of them came up in the chat room. By the way, if you're curious, again, we have like what our members are saying in here. TheoTrade is a one-stop place for all things options. They're content-rich, okay? Something for every level of trader. There are hundreds of archived seminars, coaching sessions, and of course, trading room access. The energy of the educators is palpable, okay? And the fact that all the content, okay, save for very few in-person sessions, is included, okay, in the membership fee. Theo is worth the money invested. By the way, not like we're doing any live sessions anymore, okay? Literally everything we do now is $297 for 3 months. Never going to be another live session in the history of TheoTrade. We don't do too many live sessions, but when I say live, I mean in person, okay? There is no in person. This one's also, good evening, DK is Don Kaufman. As a multi-decade risk manager for one company, okay, I worked for and owning 2 other businesses of my own, I must say that your perspective of portfolio risk management is exactly how I attempt to explain to those close to me with significant investments. Quantification via standard deviations, okay, of near and long-term timeframes are critical considerations for responsible and successful endeavors, regardless of underlying market-related or otherwise. It was refreshing to listen to your perspective, okay, on the same today. Sincerely appreciate your efforts. It's Nathan R. All right, so I could go all night on what the members are saying over here. I'm going to throw this back to you guys. In fact, I'll tell you what, TheoTrade.com/collect, right? And I want to pop back up this particular page. If you've got questions, fire them in, because here we go. First of all, I want to thank a couple of people. I was talking about the first 30 that are enrolled. Looks like we have 30 right now. Bill W. from Tennessee, Scott O. from Arizona, Steve R. from Arizona, James G. from Colorado, Christopher F. from Montana, Jason J. from Canada. Okay, looks like Choom, I hope I didn't butcher that, Choom T. from New York, Robert M. from Virginia, Stephen P. from Illinois, Bill G. from South Carolina, Mark B. from Indiana, James K. from New Jersey, Eric E. from Canada, Carrie L. from Pennsylvania, Tariq Z from New York, Benny H from Alabama. We've got actually a couple of guys here that work at TheoTrade from Alabama. Both Corey and Matt are Alabama boys. Ned P from Ohio, David S from California, Don N from North Dakota. I heard it's nice there this time of year. Paul T from Connecticut, Rita P from California, Gerald K from New York. Ironically, those are my dad's initials. Okay. Right now, yeah, there's 22 spots taken, 8 left on the riskless deal. All right, let me go back and answer a couple of the questions. One of the first questions came from Sam. Do you need margin or buying power? Okay, do you need a margin account? Not necessarily. So an IRA isn't really a margin account. To trade options in an IRA, and you can trade options now, okay, in the IRA, technically, if I went out and I bought an option for $10, it ties up $10. That's your reduction in buying power. It is not margin, okay, per se. It's not margin per se, and I wanted to clarify that. Sandy was saying, how do you do it in an IRA? Okay, I think that's actually fair. Like, how do you do this in an IRA? Oh, let me actually bring up my IRA. This is my portfolio margin account inside of my IRA. If you take a look, and by the way, I've actually got a short position inside of Costco. That did not go well today, but I'm going to let you know right now. Okay, I have some size trades on right now. When I say some size trades, okay, I have right now about $300,000 total working out of accounts, okay, of about 500,000. So I have about 300,000 working. I've got about 200 grand free. All of the trades, and I'm going to flip back to my IRA, all of these trades in the IRA, okay, these happen to be spreads. Okay, look, Lululemon. I just have one contract on Lululemon right now. I'm still in a few contracts of HYG. We were talking about that a moment ago. Okay, and again, I still have a contract left in CSX. Okay, up some 40%. I just want to show you this is an IRA. So it's not about how to do it in the IRA. We'll show you that. It's just a matter of understanding the strategy at that point. All right. So, okay, put premiums up with volatility high. So Joe was asking, when volatility's high, do the puts go for more money? Oh, yeah. I mean, crazy amounts right now. Crazy amounts. Let me show you what crazy means. What's crazy? Okay. Crazy means if you go to a product like here's a $20 underlying. It's called the XLF. It's the financials. Okay. Now the financials, this is like, it's the most docile thing. It's about a $20 product. And you can see, okay, I have positions. You know what I'm doing in here? I'm selling puts. Look, people, okay, behold, 10 days out. I mean, the bid offer spreads right now are wide because the market's closed. Okay. But I was selling things in here. For $1. $1 on a $20 product. Think about that for 3 days. Okay. For 3 days. Check this one out. I just sold this today. Today, it's St. Patrick's Day. Look, it says 317, right? 317. I sold this thing here. Okay. For the average price I sold it was $1.06. That was the 19.5 put on a percentage basis. Ridiculous. Okay. I'm talking gold, just gold. Okay. Jeff was saying the slippage in prices are crazy right now. So what Jeff is talking about is the bid offer spreads. Jeff, you're exactly right. There's an entire course that we did on it 2 weeks ago. We could see it coming from a mile away. We'll actually teach you how to work the orders. But more importantly, okay, there's only a handful of stocks and products that are good to trade right now, Jeff. I could not agree with you more. William asked, will you cover, okay, the strike criteria for the short put? Absolutely. We cover actually that by delta. We tell you what delta to sell, okay? Kerry said, who is buying the short dated options? By the way, there's always going to be somebody on both sides of the trade. There's a firm, if you want to do some research, like market making firms. Market making firms make the bid offer spread. And in doing that, okay, for every buyer, there's always going to be a seller because they get to keep the bid offer spread in there. A firm like Citadel, okay, Citadel makes a lot of markets. I'm very familiar with the market making side of the business. Next one over here. Oh, CSX, the CSX puts, okay, were $10 in the money. Okay. Was that to reduce extrinsic value? So Mark actually has obviously traded some options, and Mark's asking me, why are you using in the money puts? Mark, you're spot on. Okay. I'm trying to create a synthetic short position, Mark, by negating extrinsic, which is time value. I'm negating time value. I'm negating volatility exposure. A little bit more challenging to do right now because the volatility is up, but we'll show you the best way to do that. Okay. So is this specific to Thinkorswim? What about the E-Trade platform? So David, okay, I'm totally familiar with E-Trade right now. One of my closest friends actually runs development of the E-Trade trading application. And another one of my friends that I worked with at Thinkorswim, okay, he actually built that trading application at E-Trade. So I'm intimately familiar with it. We do plenty with E-Trade, plenty with them, okay? Next question said, how many trades a week do you send alerts for? So it varies, okay? In an average week, we might send a couple trades a week. By the way, we're trading constantly in the chat room, but when we start blasting out trades, we got to make sure 4,000 people can get them. I would say on average, 3 to 4 trades a week go out in text messages, on average. However, in the last 3 weeks, we've been a little bit more constrained in what we do. It's been a little wild, people, if you haven't noticed. Okay? All right. How long is each video in the start here list? Oh, each one of those videos, they're about 45 minutes in the start here. They're about 45 minutes. And you look at it and you're like, hey, listen, don't let this intimidate you. Okay? People are like, how long are those videos? Here, you want to see exactly how long they are? Click on it. Okay, this one's 45 minutes. All right, okay, then go back to the other video. Like, what's the longest video? Ooh, this is one of my favorites. Oh, no, this is my favorite right here. Options 301. Okay, this one's exactly 1 hour. This one, it does it for Don. Implied volatility, expected move. That one, it seriously, it does it for me. Okay, it does it for me. By the way, again, it's TheoTrade.com/collect. Sorry about that. Somebody else was asking that again. Hopefully that makes sense. By the way, somebody was asking. We do not do any in-person classes. We're not doing any in-person classes. I apologize for the confusion on that one. Especially right now, we're not doing any in-person classes. When we say we're live day to day, okay, you cannot come to my office and sit with me during the day, especially right now, okay? People, we have to be socially distant from one another right now. Anyway, we're not doing any in-person classes. When we say we're live, okay, we're live for 6 hours a day in the chat room, streaming to you, and you see our screens. Okay. By the way, I want to thank Brian D from Florida, Calvin R from Kentucky. Again, it's it's a brave new world right now. I can't stress that enough. Listen, I want to wrap up. I've gone over here tonight. Okay. By the way, the expected move link, William was saying, it's on this page. It's right here, TheoTrade.com/collect. Scroll to the bottom of the page. Okay. I can't stress to you enough. Everything you know about this business and the world, it's changed, okay? The volatility that we're seeing in the last 3 weeks, now we're in the 4th week of it, it isn't just unprecedented. It's not a flash in the pan. It's going to stay, okay? It's going to be with us. We could be working through what we're seeing right now, okay? We're on the cusp of something more severe than the financial crisis. We're somewhere between the Great Depression and the financial crisis. And I stress to you, okay, what you know about markets is completely changed. You are going to have tactics. You're going to have skills, buying stocks and holding them, okay? It's done. It's done for the next decade of trade. This is now the decade of the trader. I want to thank everybody for joining us tonight. Please enroll TheoTrade.com/collect. Thanks, everybody. I'm Don Kaufman. Have a wonderful evening. Stay safe out there. Bye-bye.